This video is brought to you by the Fiscal Female. Susie Zilligan here, owner, and I made this video series called Learn the Rules, Play the Game to help educate people on various systems in our society that they need to know about in order to operate as an adult. So this week we're going to go over credit scores, and what we're going to use as supplemental information can be found at www.thefiscalfemale.com. You can use /blog to get to the blog, or you can click on this little paper icon here. That'll bring you to the blog page. So let's get to the credit score one. Why this topic is so important is this was one of the ones driving the creation of my business. Is it just felt so frustrating to try to figure out how to start building credit when I would get denied over and over again by the credit card companies for not having credit, and I didn't realize that there was any other options. And then when I went to apply for housing, then I got denied on my rent application that I needed a cosigner in order to be accepted. So that's why this was so frustrating to me, and why I want to pass on the information to other people so they don't have to learn from experience like I did. So now let's go over PDF, why it's important, and how to calculate it. So a credit score is a measure of your credit worthiness or your likelihood to pay back a loan or credit borrowed. And it is attached to your social security number or the EIN, whatever the tax ID is for the entity. So just because you have good credit as a person, if you start a business, it has a new EIN and it is starting over. Some of the reasons it's important is because it'll impact your cost of insurance, your cost of interest on the loans, your ability to get housing with the applications and their ability to trust you. And then other opportunities like, can you start a new business? Can you get the funds for that? It takes time to improve it and to build it, but any mistakes are very quick and add up. Although over time you can resolve them, it just is going to take a little bit of hard work and focus on a daily basis. So 35% is based off of payment history, whether payments are on time, missed, etc. 30% is the amount of debt that a person or an entity has. 15% is the length of credit history. And 10% is new credit or recent accounts opened. And 10% is the credit mix. So that's the different types of credit you have and whether you have several lines of credit or just like one big loan out there. I did also want to call out here on how you can find it. So you're entitled to one free annual credit report from annualcreditreport.com. And generally you can check your credit from these three major bureaus: Equifax, Experian, or TransUnion. And the score ranges from 300 up to 850. So key numbers to remember is 670 is considered good and 740 is considered very good. There's also various apps and websites that you can regularly keep an eye on your credit, or you can even get notifications if it goes up or down. When should an individual start building credit? A person should only take credit when they can afford it. A person can get a card themselves at 18, but they could be added on as an authorized signer to start building credit. It may depend on cards, but around 13. And people with no credit history are usually declined for a regular card, but there are secured cards that are accessible. So that's where you have to just put a couple $100 down. So you can just research secured cards if that's something you're interested in. And if you have no idea how to make a budget, you can just start with the general rule, or the general formula that's pretty basic. 50% of your fixed costs that you have every month, like your energy bill, grocery bill, that kind of stuff, and then essentials. And 30% as a variable or discretionary cost, maybe someone's birthday gift or something unusual. And then 20% each month going towards savings, or if you have debt reduction. Also, take advantage of free cost borrowing calculators online, budgeting apps, and there's lots of videos on YouTube. So now let's get to the success checklist. So pay your bills on time, stay out of collections, and you can know if you're in collections by getting your credit report from Equifax or one of those bureaus. And if you get something in the mail that says collections, then I would recommend going to a trusted contact. Definitely turn on low balance notifications on your checking account. Only take credit risk that you can afford per your spend budgeted that you laid out. So if you didn't do that, then that's going to be a great thing to do. We'll make another video about that. Also be aware if you co-sign for somebody that your credit is impacted if they pay their payments late, and you are fully legally responsible for that debt if they default. So this is one reason why my parent wasn't super psyched about trusting college kids with paying on time. And make sure you have adequate insurance for all areas of your life that you have exposure. Now I have a pro tip section, so if you're really trying to build it fast or if you have some making up to do to improve your score. So you can open a secured card when you're financially able and legally able to at 18, or if you have a kid, by having them as an authorized signer on a card, and turning on auto pay whenever possible to prevent late payments. You can always rely on yourself until that one time that whatever life happens and you miss it. If possible, pay your credit card balances in full each month. And consider paying even more frequently to keep your balance low as a ratio to the max on your card. So if you have a card for a period of time, you could request a limit increase also just to do that without having to change anything. Or you can just pay it regularly, like pay it weekly and review your expenses. And then you can keep it under that 10%, which should expedite the improvement as long as you don't have any other factors. Consider your timing. Avoid opening multiple accounts at once, which is a mistake that I made. I got denied and then I tried again and I tried again, and each time that was dinging my credit. Avoid opening accounts if you're approaching a loan application because it will ding your credit right away. Also consider having smaller balances if that's an option versus fewer large balances. Review your credit report at least annually and dispute any errors that you see on there. Make sure that you can cover unexpected bills by building savings whenever possible. Cash savings should be able to cover at least 3 months of expense if that's something that you can aim for. Contribute as soon as you can to your 401k or retirement account, and make sure you're hitting that minimum. If there's a match going on, that you're not leaving any money on the table, not forfeiting anything. And then if you can aim and sustain like a 10 to 15% contribution, then you'll be in great shape when you start talking to a financial advisor and really clarifying what your financial goals are. All right, take care guys, and see you in the next video.